Today's top stories at NBR. BNZ's 74% rise in statutory net profit, cash floods into retail managed funds, government support for festivals, and there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Tuesday, November 9th. I'm Paul Brennan. Thanks again for joining us. Car dealer group Armstrong wants to use funds from a potential IPO to force consolidation in New Zealand's fragmented market, and the rise of electric vehicles and car maker-to-consumer sales won't slow it down. The company, founded in 1993 by Rick Armstrong, announced this morning, Tuesday, it had hired investment banks Jarden and UBS to help plan a possible float on the NZX and ASX. A non-deal roadshow is underway to gauge investor appetite as part of a review of the company's capital structure. Armstrong would likely sell down his 100% ownership, although maintain a majority, Chief Executive Troy Kennedy told NBR after speaking with investors alongside Armstrong. BNZ Banking Group has reported a 74% rise in statutory net profit to $1.32 billion for the year on the back of escalating house prices and a better-than-expected New Zealand economy. While its overall lending grew 7.5% in the period, the standout sector was housing. The BNZ's home lending book increased from $46 billion in 2020 to $52.7 billion in 2021, a rise of almost 15%. Joining the NBR's Maria Slade was BNZ CEO Dan Huggins.
The BNZ is a huge business. We have $120 billion of assets invested in New Zealand and $11.5 billion worth of capital. At the same time, BNZ does well when New Zealand and New Zealand businesses do well. So the economy has performed well in the last 12 months and our profitability reflects that.
BNZ CEO Dan Huggins with Maria Slade there. Naked Brand Group has moved on from the divestment of Auckland-based underwear retailer Bendon to management with a deal to transform itself into a commercial electric vehicle business. The Nasdaq-listed company, effectively a shell after its sale of Bendon in April, said today, Tuesday, it was merging with US-based privately owned electric vehicle business Centro Automotive in a stock-for-stock deal. Naked and Centro's directors have both unanimously approved the transaction, which is subject to approval by Nasdaq, ASIC and the shareholders of the companies, as well as Naked having at least US $282 million in cash prior to closing. Naked shareholders would own about 30% of the combined company after the deal. The company would be renamed Centro Automotive Group following the acquisition and remain on the Nasdaq under the Naked ticker. The transaction is expected to be completed by the end of the year. Cash is flooding into retail managed funds, with the latest survey from consultancy Zenith Investment Partners showing net funds inflow of $4.27 billion for the 3 months to September 30. The main beneficiary of the surging investments was fund manager Milford Asset Management, whose funds inflow was more than double the next closest rival, ANZ Investments. The Zenith figures show Milford has been the favourite fund manager for retail investors in each of the past 4 quarters. Milford Chief Executive Mark Ryland said its active management investment philosophy was particularly well suited to current market conditions and attractive to investors. New Zealand's newest stock exchange, Catalyst, has revealed the first company to IPO on its platform will be Matu Aramoi, a venture capital fund tied to Ken Erskine's deep tech investment firm Matu Group. And joining the NBR's Will Mace was Matu Aramoi CEO Ken Erskine.
We thought, wow, this is just totally the most perfect fit, because what it enables Matu Aramoi to do, and the wider Matu Group, is to give access to individual retail investors to a class of asset and an investment type that has previously never been available to them.
Matu Aramoi CEO Ken Erskine with Will Mace there. In an effort to ensure large summer festivals proceed, the government is going to take over most of the risk in case an event has to be cancelled because of the COVID-19 pandemic. Economic and Regional Development Minister Stuart Nash has announced an events transition support scheme, which he said would give summer festival organisers greater confidence to plan ahead and incur costs, despite the public health risks posed by COVID-19. Under eligibility rules, large events must also be run by a New Zealand organisation and not receive funding from any other government source, nor be underwritten by other sources such as local government or insurers to be eligible. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, an analysis of how much the bosses at the 4 big banks earned last year shows departed BNZ CEO Angela Mentis was once again the highest paid, and NZX-listed insurer Tower launches a New Zealand first for assessing residential risks. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here again from 5:30 tomorrow for another NBR Today.